Good evening. Right now in the Netherlands, today is the 17th of May 2024. My name is Kenneth Muyingo, and I'm the Public Relations Officer for the Ugandan community in the Netherlands. And welcome to this UCN Connect broadcast. Today, we are going to be talking about taxation. We're going to be having a conversation with the Career Advancement Network, and the conversation evolves around taxation in Uganda. And because we are living here, but most of us have interests in Uganda. So this conversation is basically going to be facilitated by yours truly, myself, but I'm going to be having two people with me in the studio, Yvette and Violet, and they're going to be guiding us or giving us this information because they are experts in this area. And I want to first of all just take this opportunity to bring you greetings from the leadership of the Ugandan community here in the Netherlands. We hope that all is well and that you are in good health, you and your loved ones. And if you have lost a loved one recently, we sympathize with you, our condolences to you. And if your loved ones are unwell, we wish them strength and a quick recovery. And if everything is well and you are on top of the mountain and life is as it should be, we also congratulate you. Keep doing what you're doing, and let's keep moving forward because that's how community keeps progressing. And right now, I just want to bring in Yvette and Violet. And if you can hear me, please give me a comment wherever you're watching me from. I would like to just know if my sound is clear. Just please help me and send a comment. Just type a comment. I'll be able to know if you can hear me. I would really appreciate that. Hello, ladies.
Hi, Kenneth.
Hi, Kenneth.
Welcome to this UCN Connects broadcast with the Career Advancement Network.
Thank you very much. Thank you for having us.
You're welcome. And maybe let's have a brief moment to introduce yourselves to the community because you are live on the Uganda House Netherlands Facebook page and also on the Career Advancement Network YouTube channel and Facebook page as well.
Thank you, Kenneth. My name is Yvette Wakabi. I am an international tax specialist based here in the Netherlands. I work for an NGO which is dedicated to study in cross-border taxation, which we call international taxation. I'm originally from Uganda. I've been practicing, I practiced Ugandan tax for a very long time. And I strongly believe that what the biggest problem with tax is information asymmetry. Those who have good information make good use of their tax and then don't have very many issues with the law. And those who don't have information are usually surprised by the taxman. So I hope by the end of this webinar, everyone will appreciate what their obligations are and what their opportunities are.
Indeed. Wow. Good stuff. Thank you so much, Yvette. And over to you, Violet.
Okay, thank you very much for this opportunity. My name is Violet Nakakawa, and I'm a tax associate working with an NGO known as International Bureau for Fiscal Documentation, which deals in various areas of tax, research, editorial, and then government work. I've been in practice for over 5 years now, and I also have experience in Uganda tax.
Wow, good stuff. So we are in safe hands. I'm so glad that you have made time out of your busy schedules to be here with us and help us shed light on this. Most people, when they hear about taxation, they want to run away because they think, yeah, I'm not going to hear anything that you have to say, but at the end of the day, it's something that we cannot walk away from. So just off the start, I just want to say thank you to both of you for taking the time to have prepared this for this broadcast And I understand that we have a presentation that you have prepared for us, and then we will be having a session for some questions and answers afterwards. Is that right?
Yes, that's right.
Nice. So thank you so much again. And our viewers, if you can hear us, let us know where you're tuning in from. In the comment section, we would like to just, we don't want to be in here by ourselves. Let us know where you're tuning in from. I am in my home here in the Netherlands, but I'm on the Uganda House Netherlands Facebook, online studio account. And then we are broadcasting on the UCN page. And maybe, Yvette, you can let us know where you are.
Yeah, we are based in Amsterdam, East right now. Yeah, that's awesome. Where we are attending the webinar from today.
So it's a small world. I'm in Leiden, you're in Amsterdam. Yeah. So our viewers, let us know where you're tuning in from and where you're joining this conversation from. So in the interest of time, I just want us to get into the part of the presentation and to be able to make the most use of the time that we have here. And I just want to hand the mic over to you ladies. Take it away.
Thank you, Kenneth. As you mentioned in the beginning, many of us, much as we live in diaspora, we still have a lot of attachment in Uganda. Many of us, when we make our money, we want to invest in property, have a few businesses, and now the newest form of business is online business, because you see very many people abroad saying, oh, I can deliver things straight to you in Uganda. Many of us have rental property. What we want to do today is to show you any tax implications that any of the attachments that you have in Uganda right now may have on you in regarding taxation. So we are going to base on what is in the Income Tax Act to let you know what your obligations are in line with business income, if you have any, investment income, which is called property income in Uganda. That is when you have dividends, interest, or royalties, or rental income in case you have rental property, and capital gains tax in case you sell any of your properties. Please, let's go to the next slide. Yeah, so this is how our agenda will go like. Violet will take us through business income in case any of you is running a business in Uganda. What are your obligations in that line? Then she'll also take us through investment income. Anyone who is a director or shareholder in a company, what are your obligations in that line when you're based in diaspora? Then she'll also take us through rental income tax in case any of you has rental property in Uganda. And I'm sure if you have a rental property by now, URA has knocked at your door before. So she's going to also take you through that. And then I will take you through capital gains tax. And then for those who are doing online selling, online businesses right now, they are in future, all right, from last year, there are obligations that you can also have to fulfill. So I'll take you through that. And finally, someone asked me just before the broadcast that what happens to people who are dual citizen when you pay tax in the Netherlands, in the UK, in Dubai, and you're also a citizen in Uganda. So finally, we'll talk about what your businesses and all the tax you pay in Uganda, how it interacts with the taxes you pay, whichever country you're in, like Netherlands, for example. So let's go to the next slide and Violet will take us through business income.
I welcome you once again. Our first topic is going to be taxation of business income. What does business income mean? Business income simply means any income anyone derives by carrying on any business activity in Uganda. What does it mean? It means that in case you have any business or any activity where you participate and you earn something, you are obliged to pay tax, and by so you're being taxed on business. Under business income, you can be taxed as a corporate or as an individual. As an individual running a small business. And corporate tax, this one for it's a tax which is charged on corporate entities or companies, and it is imposed at a rate of 30% on every corporate entity. And it is chargeable, it's taxed on chargeable income. And what does this mean? It means that when you earn income, which we know as gross income, there is what we call allowable deductions. They are deducted on your gross income. And what the difference you get is what we call chargeable income. And that's what they charge on, the rate of 30%. And then,
and maybe what we need to know about the allowable deductions, it is anything you use in a business to make the money, anything that contributes to gross income is what is allowed as a deduction. So if you take out a loan to do some personal stuff, you cannot bring it into a business and deduct the interest. So the deductions that are allowed for any corporate business are those which are contributing to the income. So if the income that you're getting is exempt, then you cannot bring deductions that you used to make exempt income to deduct from other gross income in your other businesses. So that is very important to note, that not all deductions are allowed as deductions. They are those that qualify to be deductions.
Yes, actually, you have even reminded me of sometimes back in Uganda when people used to get receipts from other businesses in case to reduce their tax liability. But in most cases, you'll find that what the expenses that they are claiming for are not even in any way related to the business that they are doing. You find someone is having a shop over there, but under the expenses, they are Pampers, which is totally different from his or her line of business. As we've seen the corporate income tax, how it applies, but also we have those people who have small businesses. In Uganda, under the income tax law, anyone who has a small business with a turnover or gross revenue of below 150 million is subject to a turnover tax known as a presumptive tax. And for this one, there is no specific rate. But what they do under the Income Tax Act, they are different categories. They specify that salons, garages, workshops, and so forth, they qualify to be under this category, and they will be paying, let's say, 450. That's why you find in most cases, people, shops or business owners in downtown, they do not file returns. But every year, URA guys come, they request you, they ask you for the receipts, whether you paid the URA, the income tax. Because for them, they do not file, they just ask them, they just give them the assessment, and they ask them to pay a certain amount, which is based on the category under which they fall, and that is income of a small business.
So maybe just also to build on that. So like Violet had explained, with corporate income tax, a company which has audited books or which has very organized accounting records will normally file a return like how she mentioned, and then pay 30%, but with those allowable deductions. So what goes into that is if there's a very high compliance costs. For example, if you have tax assets, like if you have property, if you have things you have to depreciate for your tax return, you have to go and get valuation. So you find that it is expensive for a company to keep records where it can use those allowable deductions, because URA will come and tear through your deductions and say, these are Pampers, what are they doing in a hardware store? So what is done in order to reduce the cost on you, the taxpayer? URA has come up with rates, which Violet has just mentioned, that they have gone, they grade actually according to municipalities. Like Kampala CBD has its own rates. So if you have a salon, if you have a shop, if you have, so they have set rates. And then outside CBD, they also have rates that they charge per year. So the charges are online. Like you can go and see if I'm running a garage endeavor, this is how much I pay per year. But that said, you can elect to pay taxes under the 30% corporate tax side, but only if you're sure that you will keep your records well, only if you're sure you will have your deductions that are allowed by URA, so that you won't have a problem. Because if you're paying tax that they have set, no one is going to ask you for books, no one is going to ask you for how much you made, no one is going to ask you. So that is why there is that presumptive tax for small business owners, to take away the burden for them to have to keep books that are organized. Next slide.
Next
please.
slide. As we've seen the business income, we have what they call a taxation of investment income. We've seen so many Ugandans, even here, I'm very sure we have so many Ugandans who are investing in different things. You might find that they are not like physically involved in them, but they're investing. And at the end of the year, at the end of the year, URA will come and tax your income. That income that you've gained as a result of investing. We have, under this, we have dividends, we have interest, and we have royalties. Another slide. Let's look at payments to resident persons. Resident persons are persons who are tax residents in Uganda. Another slide. For resident persons, there is what we call withholding tax. In case you earn such income, a withholding tax has to be applicable or is charged on your income. And in case you earn income as a way of investing, let's say you're investing in government securities and you earn income, which we call interest, a 15% withholding tax applies on you. But this is not final. It does not mean that if you invest in government securities and you earn interest and a withholding tax is charged on it, that is final. No, that is only for interest that you've earned in investing in government securities. And what does it mean? It means that in case you have any other business apart from investing in government securities, it will be taxed differently because you are a resident person. So this will be taxed differently, and then your other incomes will be taxed differently, and therefore it's not a final tax. And then we have dividends. What are dividends? This is income someone gains from investing or having shares in a company, or having like owning something, but let's say it's not like you're not the only one owning it, but you have other partners that you're working with, and at the end of the year you earn what we call dividends, and a tax rate of 15%, which is known as the withholding tax rate, applies on these dividends. And they are also not final because besides investing or having shares in a company, you might be having another business somewhere else. You might be having, let's say, a school, you might be having, let's say, a shop. They will be taxed differently. And then also, in case you pay, there is a payment for goods or services, and you receive when you're paying someone for supply of goods and services, you have to deduct that person a withholding tax rate of 6%. And in case you deduct, you're supposed to remit that money to URA.
So, okay, also to help to understand that more, in Uganda, URA has gazetted certain companies, including ministries, including ministerial departments like local governments. So when you supply goods or services to those people who have been gazetted to withhold, then they have to always withhold 6%. I think many of you, if you've done business in Uganda, you always know that when they pay you less 6%. So that is what that means.
But also to add on that, there are those people who are exempted from withholding tax, but you have to just apply, and the application is annual. So it doesn't mean that once you're granted a withholding tax exemption, it will be forever. No, you have to apply. It's renewed annually, and every year a list is published in the news and on your website. Let's go to the next slide. For payments to non-resident persons, a withholding tax is also charged on them. Whenever you pay someone who is not a resident, that is a person who is not a resident, as in terms of tax, you have to withhold. Let's see the rates. Next slide, please.
And it's also very important to know that many of us on this broadcast who are living in diaspora would fall in this category. So any of us with investment income that falls in this category, who very soon we shall see who a non-resident is. But for now, as a general thing, let me say all of us here are non-resident. So these are the rates that will apply to any of the investment income that we make in Uganda right now.
Okay. For non-residents, all payments of any nature, all payments in terms of dividends, interest, royalties, management fees, rent, payment to public entertainers, non-service contractors or professionals, and then natural resource payments. A withholding tax rate of 15% applies on them. What does it mean? We've seen so many Ugandans. Actually, I remember sometimes back then there was a case whereby someone brought in an artist from Nigeria for a concert, and they ended up not paying URA. What URA did is to capture this person as the person was going back from the airport because they didn't pay the tax. So whenever you plan to bring in someone to take you as an artist to Uganda to perform, just make sure that you deduct withholding tax of 15%. And if you don't, the liability will be on you.
Yeah, and then there's a note below which we shall go through in detail. So all the rates, because now these rates apply to us as residents in Uganda right now. So for example, if one of our children here becomes a big artist like the twins in the UK were, and then it's now reversed. They're the ones going to Uganda to perform. So the person in Uganda is supposed to withhold 15%. But when this person who is resident in the Netherlands now comes back at the end of the year in the Netherlands, we also file our returns here, don't we? So when you file your returns, you're supposed to put in the income you sourced in Uganda, and then you will get what they call a tax relief, simply because Uganda and Netherlands have a tax sharing, a double taxation treaty. So we shall cover this in the last slide, but it's a note here. I just wanted to bring it in. So this rate can be final or not based on the treaty, availability of a treaty.
Awesome. Thank you so much. Let me just pause you right here, ladies. You are doing great. Thank you so much. If there is a question from our viewers and listeners, if you have a question about what they are sharing in the slides, please put it in the comment section, because we have a Q&A session after the presentation so that we can have your questions answered. It is very valuable information, and I'm just blown away. I didn't know this, and I was just moving blindly thinking I know what I'm doing, but I'm loving it, and I hope anybody is enjoying it as much as I am. And if you have any questions, please put them in the comments, and also let us know where you're watching from. Back to you, ladies.
Okay, just to enlighten more on royalties, I know most people might be asking, might be questioning themselves, which kind of royalties are these? We've seen in Uganda, we actually not even seeing, but practically, we have so many companies in Uganda who like access software license, but they get them from abroad, or they just they buy the license from non-residents who are not Ugandans. Let's have a look at the cloud software. I know you have an idea about it. So many companies in Uganda use cloud, but they just buy it from people from abroad or from non-residents. And whenever you make a payment for this software, a 15% withholding tax rate is charged on it. To the next slide, please. Taxation of rental income, as we've seen that different incomes are taxed differently. We've looked at the business income. We've looked at the investment income. Let's look at the rental income. I know most of you here might be having rentals. Rentals in terms of like house properties, you rent it to someone. Let's say someone is using it for business or for accommodation. And at the end of it all, whether a month or a year, you're earning what we call rental income, just because you're allowing someone to use your property, and this person is paying for the usage of your property. So URA comes and says we are charging rental income. And let's look at the rental income for individuals. The rental income for individuals, first of all, there is what we call a threshold for individuals. Just a minute. For individuals, first of all, we as we saw for corporate or for company owners, that when you're registered as a company, you are allowed a deduction, and that's the same for individual for rental income under under corporate taxation, you're allowed a deduction, but for individuals, you're not allowed a deduction. But instead, we have a chargeable threshold. What does it mean? It means that if you're below a certain level of income or earning a certain level of rental income, you do not qualify for rental income, but just as a rate of 0% applies on you. But if at all you're above that income, a percentage of 70% is applied on you.
Next slide, please.
Next slide, please.
What is the next slide?
Okay, so the amount which is in excess of 20,000 is what rental income is charged. Rental income tax is charged on, and any amount which is below that amount is exempt. And what does it mean? It means that any amount above that rental income tax of 12% is charged on it when you are an individual. And in case of a company, a corporate tax rate of 30% applies to it. But remember, it applies to gross rental income.
So let's go back to the previous slide, and I tell you a small story about rental income. So rental income is one of, first of all, we mentioned in the beginning that when we're doing tax mainly for like a company, we have what we call gross income. So with gross income, they'll bring all the income of one person together and tax, like for a company, then they'll tax it at 30%. And then if you've paid any withholding taxes, then they can be credits. I don't know if that's too hard, but yes, any tax you have paid is deducted, and then you pay an overall tax of 30%. So rental income is one place where the policymakers believe that people can never make a loss when you have rentals. So if they were to aggregate rental income with business income, investment income, and then business income has all these deductions, then a person would end up not paying tax. So it is believed that with rentals you cannot make a loss. So we have there's been a back and forth with the policymakers with rental tax. So just before last year, they had introduced a law where individuals were allowed to deduct up to 70%, 75% of, like, if you made rental income of 12 million, so you would get 75% of that as deductions, and then tax would be charged on the other one. So that was very, very generous, very, very generous. And then that only lasted for 1 year and it was removed. But also before last year, if you borrowed money, for example, some people can take money from a bank here and then go and do rentals at home, or banks in Uganda. So the interest that you pay to the bank was allowed as a deduction. But I think it was also affecting the rental incomes for the revenues for the government. So now, from last year, for individuals, you get your whole gross rental income for the year. Remove the 2,820,000. That is what is not taxed for rental income, and then the rest you charge 12% on it. So that is the interesting. There's been a change almost every year on rental income, but that is the history behind it, or the policy decision behind it. That they believe that like you cannot make a loss when you have rentals, so that's why it's taxed like that. Maybe now you can go through the corporate side.
Okay, for the corporate taxation of rental income, as we've seen earlier, that corporate tax of 30% applies to business income. It's the same thing to do with rental income. A 30% applies on any person's rental income, but it applies on the gross. But as Yvette told us, that we have what we call allowable deductions. But for rental income, it's different. They allow, but to a certain level or limit, and the deductions are capped at 50%. What does it mean? It means that if in a year you have deductions which go above 50% of your gross rental, it means that they are only going to allow the 50%, and then the rest of the deductions will be forwarded to the following year. Next slide, please.
Yes, and now I think this is what we shall find interesting. So we have what we call capital gains tax. It's some kind of tax on wealth. When you dispose of your property, there's tax that's charged on it. So on the side of corporate, if did I do corporate? This is individuals only. Yes, so in the past, or right now, currently, if you were to dispose of non-depreciable business assets, then you would add them as part of your income. That is for small businesses, and then tax them as part of that. And then what was good for us individuals is that private assets were never subject to tax. Like if you sold your home or sold land, or they were not taxed. I think for many of us who are here in the Netherlands know that most of the countries in the West tax those properties. Actually, I think the only thing they exempt abroad or in diaspora is residential property where you stay. Otherwise, any other asset you sell, you tax. But Uganda hasn't been taxing that. However, if you sold shares in a company as an individual, that is the only time that capital gains was charged on it. But now what is interesting, and this is probably good for all of us who have land in Uganda or rental property, actually shares were also exempt. But now in April, they released the income tax amendment bill for the year. And then there is a suggestion which all of you will find interesting. So now, if it is approved and the budget is about to be read in 2 weeks' time, and they say that this has passed as an amendment, from now on, when you dispose of non-business assets, if you sell land in cities or municipalities, except principal place of residence, just like it is in the Western world. So if you sell any land or property, apart from the home, your residential home, then they will charge you 5% on the consideration, on the money you have received for that property. Then I mentioned earlier that shares were also exempt for individuals, like if you sold shares as an individual. But now, if this new law is approved by Parliament and signed by the President, then if you dispose of shares in a private company, so many of us here have small companies back home, and then if you sell shares and then that is seen in the books, then you have to pay 5% on the total amount received for those shares. And finally, we have just mentioned rental tax. If this property from which you have been getting rental income and you've been paying rental tax on, if you decide to sell this property, you're also going to pay 5% of the total value, yes, of what you've sold that for. But then I want to make this clear. This is a proposal that is being discussed in the Parliament. So it is in the tax amendment bills, which came out in April, and the final reading is usually the day of the budget. So that's when we shall know if this has been approved or not. Yeah, so now it's people advocating, people who go to Parliament to really argue out those bills. That's when the political economy comes in, and then it depends on how this argument will go. But if that is approved, so all of us here who own property in Uganda should expect this. So every time you're going to sell your land in Uganda after July 1st, if this is approved, know that every time you sell land, that will always come in, and this is how it happens, because sometimes the system can be self-policing. For all this property, when it is sold, you have to pay stamp duty when you're making the transfer. So you would say, oh, what if I sell my plot? Unless you're selling a takangalyandagano, the chairman akubiyeko stamp. But if it is something which has to go through registry, and then you have to pay stamp duty on it, now what happens is the registry is supposed to alert URA and say, so where is the 5%? Have you paid the 5% on this? So when you're making deals with the person you're selling to or who you're buying from, you should agree and say, I'm selling less the 5% or more, so that you take care of that cost, knowing that if you're the one who is selling, you're going to receive, the person who is selling is going to have to pay. So maybe you can charge the person who you're selling to a higher amount to cater for the 5% you're going to pay. You understand? So
Yeah. So the 5% is paid once in the transaction, not
yes,
twice.
once in the transaction. When you're selling your property or shares in a private company or real estate property that you've been using for as rental property. Yeah. Okay, I think let's go to the next slide. Yes, and now this is a new tax that has been implemented by very many countries worldwide. Everything we have mentioned so far. So tax has been charged on physical businesses, physical presence. Like you have a company, you have a shop in Chikuvo, you have rentals. It is something you touch, something you can see. But the world has evolved from around 1998. The internet came. The internet has evolved so much that so many things are happening online. Like in the past, you used to go to a bookstore and buy books. Then Amazon came and started selling books. We used to go to the movie cinemas. All of us who are millennials have been to the movie cinemas, movie shops to rent DVDs. But now that is not possible. We're all streaming Netflix, Disney and everything. We used to go to buy clothes from downtown, but now everyone is talking Temu, everyone is talking Shein. So what is happening now? It is hard for governments to tax such people because they have nowhere to find them. But these people are making money in Uganda. So for big companies comply actually because they have a name to protect. When Uganda introduced this tax, you see, if you go to Facebook Meta, you find that Meta has released a press release saying that we are going to start charging VAT on online advertisements. Like big companies usually comply because they have a name to protect. It's called a reputation. But for small people like us, many of us are doing online business and they're saying, oh, if you want to buy shoes, if you want to buy this, I can deliver. Some people are doing business so much that they are making beauty products. I think beauty products is the commonest thing I see nowadays. Someone is selling tea somewhere, someone is selling facial stuff, and then they are selling in Uganda. So what is happening? This person is making money in Uganda, but is not physically located there. So Uganda does not have a way of taxing them. So what have countries done? Countries have introduced what you call a digital services tax. So if you do any service business in Uganda and you meet a certain criteria, if you're selling this business to people who are not companies, because the thing is when you do online business with a company is going to file its returns, put in its books that, oh, we paid so much money to booking.com, so much money to Netflix for our employees to stream during breaks. So that URA can see that, this company has made money from this. So it is easy for URA to track. But then when it comes to individuals, things come from Amazon to your home, from Shein to your home, like no one is seeing what's happening. So what is happening now? URA is requiring you, if you have an online business, to register in Uganda and then pay tax. So the total of what you make through doing electronic services, then they charge 5% of that in the whole year. And then when you're registered, you're supposed to make a return every month, after the tax period of that year, 15 days later, and then you pay the money that you made off that. So that may also capture many people who are doing online business, and this is how tax authorities operate. Because someone will say, "Oh, who will know that I'm selling things in Uganda?" Mm-hmm. So, for example, in the UK, the HMRC has this department that is just meant to sit there and read news and see what's happening in the world, see who is living a lifestyle that is beyond, so that they know if they should pay tax. So same thing here. We have people who are, these things are being done online. People are on TikTok advertising these products, delivering them to Uganda. So if you are as digital service department decided to say, oh, let us look for who is doing online business within Uganda. So they have all those means. They have Facebook, Instagram to see who is doing this, which influencers are selling things like this, and then they can write to you and say, oh, from what we have seen, you owe us this much in tax. So this is how the digital service tax will affect us. But then they for now, they are giving examples of what those services include. If you do data services, online advertising, services delivered through an online marketplace or intermediation platform, including accommodation, like I mentioned, booking.com, vehicle hire, marketplace, and any other transport, or you know all those types of services that we get from. Then digital content service, including accessing and downloading digital content, online gaming services, because nowadays casinos are all over. I can be playing a casino game in the US, so the US is making money in the Netherlands. So if anyone in Uganda is now like if you're selling gaming services to Uganda, people to Okusibe betting and all that stuff, then you can be covered by this. Cloud computing, data warehousing, services other than those services that relate to above, never through a social media platform. So basically, they are trying to capture anything that you can do online to make money in Uganda, and that can be taxed. Next slide, please. I think that will be our last slide. No, our last slide. Yes, and now finally, we shall talk about how, if you're resident in Netherlands and resident in Uganda, UK, or wherever, if you're in diaspora, why would you be taxed in Uganda if you're here, if you've been predominantly staying here? So everything we have shown you so far is you having physical business in Uganda or online business in Uganda, and you're sourcing money in Uganda. So if you're resident in Uganda, and this is how resident is defined. If you have a permanent home in Uganda, they will consider you resident. If you or if you're present in Uganda for more than 6 months in a year, then you're considered tax resident. Or if they can average it, if in 2 years you have been in Uganda for 122 days, there's a way they calculate it, then you're still resident. Or if you're like people who work here in Uganda House, Brussels, it's called Uganda House, right? Those people, Ugandan embassy.
At the embassy, Ugandan embassy in Brussels.
Yes, so if you're working for the government but in a foreign land, then you're resident in Uganda. You aren't considered to be resident in the country where you're working. So, well, how does this help? So if you're found to meet this criteria, then you're supposed to be taxed on all the income you make all over the world.
Now it's getting interesting.
Yes. if Uganda finds you resident based on this criteria I've mentioned, then Uganda will tax you on all the income we have taken you through, on the business income you have in Uganda, the investment income you make in Uganda, the capital gains, or the digital tax, the digital income you make in Uganda. And then it will still tax you if you found that maybe you spend 8 months in Uganda and then the other 4 months in Netherlands. It will also tax you on any money you make in Netherlands, if you're resident in Uganda. So, but then this information I'm giving now would mean more to people who are now resident in Uganda. I'm hoping all of us in diaspora are not resident in Uganda, because we don't meet this criteria. Yes, you could be having a permanent home, but you could also be having a permanent home in the Netherlands. So in that case, the countries have to determine where you're really resident. So in the double tax treaty, there's a way that they can break a tie. If you have a permanent home here and there, then they'll see where you spent more days. If you spent more days in the Netherlands, like 6 months were spent here, then you're resident here in the Netherlands. So that's what you have to know. So it begins with them determining where you're tax resident. And this is what I want to make clear. Being a citizen does not make you tax resident. Being a citizen, yes, means that you're domiciled somewhere. That's where you belong. But a tax resident means this definition I've given. So even if you have a Netherlands passport and you live in and you work in the UK for 9 months, then you're tax resident in the UK. So it's the UK which will have to tax you on worldwide income. So what do I mean now? Since we are all non-resident in Uganda, so how does that affect us? If you have income, like the income I've mentioned, if you have rental income, if you have all that income in Uganda, of course you have to be taxed there, simply because you source that money in Uganda. So esente z'okoze Uganda zirina okutakisingibwa e Uganda. So rental income or dividends, those of interest, it all has to be taxed in Uganda, because that is where you source it. But if you're resident in the Netherlands, when you file your return, like we filed our returns last month, since you're tax resident here, Netherlands also expects you to declare your worldwide income. So to put in your tax return here, I don't know if you've opened your ballasting return for here. It always has places where you put that. Did you make any income outside the Netherlands? So you put all that income. There are benefits for declaring your worldwide income, in case some people want to borrow money here or buy a house, and then they have to ask you, where did you get all the money from? Those are the benefits of declaring your income. But that doesn't mean that if the income paid tax in Uganda, it's going to be taxed again here. Like what the countries aim for is that you don't get taxed twice. So declaring your income in the Netherlands, that doesn't mean that Netherlands will tax you again. If your dividends paid 15% tax in Uganda, and here dividends don't pay tax, you will not be taxed. Or if a treaty says exempt dividends from Uganda, then they'll be exempt. But where you might pay tax is if for example you're based in Mauritius and their tax rate is very low, the Netherlands will want to tax you at the Netherlands tax rate, which is 20%, for example. So if you paid 5% in Mauritius and you declare your income here in the Netherlands, then Netherlands will tax you the other 15% to ensure that you're paying equal. So what that does is, it, as a citizen in the Netherlands or as a resident here, if they don't tax you to equal everyone, it affects the neutrality in a country, which means everyone will run out of the Netherlands to go and invest in Mauritius. So the purpose is for them to always balance, your country to always balance the income and how it is paid. So whether you invest abroad, if you invest in a tax haven, as we call them, those countries that don't charge taxes, then your country should beef it up, and then like your tax level. But if you're investing in a country which charges more tax or the same tax, then it's just a formality for you to declare and say, oh, I made this much and I paid this much tax. Since it's the same, it is that you get relief. So this country will not tax you because you've already paid tax where you sourced the income.
Wow. Yes. Awesome. It's this is good. So you say if somebody, for example, makes money in a tax haven country,
yes,
and they don't pay tax in that country, but then their original, for example, if someone is from Uganda and they go to Switzerland, for example,
yes,
and they have some property there, it's up to the person who owns the property to let the Ugandan tax authorities know that, hey, I own these things in Switzerland.
Yes, but only if you're if you're tax resident in Uganda.
Yeah.
Then you can put all the properties you own outside. You don't have to declare properties, but you declare the money you earn off those properties. If it's capital gains tax, if you sold something, because now we have bank issues with money laundering and all that stuff.
Yeah.
So you don't want to one day to come and say, oh, I got money from abroad. How did you get it? You say, in my tax return, I put that I sold my property and I earned this much in capital gains, and this is how much was taxed. So that's part of why declaring your worldwide income is important is that you don't have to pay tax double. Like, countries are not meant to make you pay double. They always excuse you for tax you've already paid, but it is just for all your affairs to be smoothed.
Yeah.
Yes, when you can defend things. If anyone has bought a house here, they send you a form, an assessment form, to show where you're getting the money from.
Yeah.
That's part of the things that you used to defend where the money was coming from.
Awesome. This is good. And I think there's a question here. It's a personal one. Dual citizenship. How does this sit as far as, so you mentioned about the issues of being a permanent resident. If I am a dual citizen, because this is a question that some people have a concern. They're thinking about getting dual citizenship, for example, but they're concerned about the tax implications of dual citizenship. Can you maybe say something about it?
Okay. As Yvette has mentioned, being a citizen does not mean that you're a tax resident. Dual citizenship is different from the laws of taxation.
Okay.
It doesn't mean that if you are a resident or if you're a citizen of Netherlands and you're a citizen of Uganda, you will be taxed in both countries. You will be taxed in a country where you are a tax resident.
Mm-hmm.
Unless one of those countries is like the US, because the US taxes its citizens.
Yeah.
So if you're a citizen of the US, you're supposed to file your return every year, regardless of where you're staying. Even if you don't stay there for 10 years, unless you renounce your citizenship, you always taxed in the US. So there are a few countries which tax on citizenship, but most countries tax on tax residence. So where do you spend most of your time? Where are your biggest ties? So, and then you can be found to be tax resident in, actually that should be the question to ask. What if I'm tax resident in two countries?
Yeah.
Then those countries usually have a way in terms of collaboration, how they determine where you actually are resident.
Yeah.
So much that it will go deep into where are your vital interests. Like, if you have a home in Uganda, a home in Netherlands, you spend almost the same days. So where are your interests? Your wife and children are here, or if you have two wives and two families, then they will see which like, really they'll go in a case by case basis.
Wow.
Yes.
Then that gets really personal.
It gets very personal. Okay, like when tax cases get very personal, like they'll come and then see, like, where is Kenneth really best? Yes, he has kids there, kids here. So where does he keep his most valuable assets? Where does he, all those things? So they dig deep, and then finally they say, okay, Kenneth is now resident in Netherlands. But in the event, and this normally happens for companies, that both countries fail to agree where you're resident, then unfortunately, that's when you'll be taxed double.
Yeah.
Because no country will relieve the tax you've paid in the other country.
Yeah.
Yeah. So that's the only problem with your tax residence not being determined from the facts available.
Awesome. Thank you so much for clarifying that. Is there anything? So this is the last slide.
Yes.
So thank you so much, ladies. I will just put this out and bring you back in full screen. Thank you so much for taking the time to prepare this presentation for the community. I think it's very timely and very much necessary, because sometimes we don't know what we don't know.
Yeah.
And information like this, the way I like to think about it, we would rather have it and not need it than to need it and not have it. So this will remain on the platforms where we are broadcasting. And you are sharing some really deep things. And for some people, maybe we may have to watch this more than once to be able to get everything that has been shared in it. But there's more information. You can get most of these things on the URA website. And so if you have any questions right now
maybe as you wait for questions, Yeah, there's something we didn't talk about, Efris. And the only reason we didn't talk about Efris, but we shall talk about it because it's in the news, is I believe that no one here is running a business and they're VAT registered in Uganda. But just to give you a brief about Efris.
Yeah.
VAT was designed to be a self-enforceable tax. Like the way it is designed, it is a tax that collects most revenues for governments simply because it cannot be defrauded.
Yeah.
Yeah, because when you buy, like it's collected by, first of all, traders who are VAT registered.
Yeah.
But those traders don't pay the tax.
Yeah.
Like when a trader collects a tax from the people they are selling to, they deduct the tax they suffered when they were buying. So a trader shouldn't pay tax. Like that tax should always be paid from a consumer in a household.
Yeah.
Like gwasembire gula chintu gwasasula ki omusolo ogwo. But not really.
The final consumer.
The final consumer. Ayinza okuba nga wawansi oba nga wawaggulu naye. So what happens is people like traders would still want to beat the system. So people collect the VAT for the government. That money they collect is not theirs.
Yeah.
VAT that you collect here is not for you, it's for belasting.
Yeah.
But human beings will what I could say. At Okuziwa, it becomes a problem. Yeah, so they began doing things, Ogula invoice from people to reduce the money they've collected and all that stuff. So what is Efris? So worldwide, they've been inventing ways okujao obubibwa VAT. It's not your money, you're only collecting it for the government.
Yeah.
So then they brought what they call real-time reporting. So anyone who qualifies to be VAT registered, and one who qualifies to use the Efris software, because I don't think everyone qualifies. I think it's a given threshold of people.
Yeah.
Then what governments are doing is actually it began in the EU where they do real-time reporting. Once you make sales, it goes directly to the tax authority.
Yeah.
Until you have collected so much VAT.
Yeah.
And then they also see how much VAT is being deducted when you also buy.
Yeah.
So this Efris was only meant to stop people from one, selling fake products, but two, like not giving you what they have collected because
And the declaration.
And declaring what they've collected. So that is why we have that.
Yeah, awesome. Thank you so much. We have a comment from Pauline. She says, thank you for the information. And just while she's some more information, there's some information we received also from the Uganda Revenue Authorities. So this one is specifically about the electronic physical receipting and invoicing solution. That's the one she was talking about. And then this one is about withholding tax. There's something else about the URA AAE business benefits manual. And there's a guide to taxation and the hotel accommodation sector. If you're thinking about building some hotels and accommodation, there's good information there. And then there's a guide on incentives and exemptions available to investors in Uganda. And the last one, yes, this one is about Efris. And this information is available. You can get it at Uganda House in Amsterdam. In Weesp. If you go there, we will make sure that this information is available there. You can pass by and pick a brochure. And the thing I like about information is that it's like the truth is like the center of town. You may not want to hear it, but you may need to know it. And so let's not be found on the wrong side of the system. I think the best thing, and maybe just while you were sharing, I got a question from somebody who was asking, what is your motivation, Yvette and Violet? Why are you doing this? Maybe we can start there.
Okay, for me, why I'm doing this is to enable Ugandans know their obligations as compliant citizens and residents,
Indeed.
and also have successful businesses, because we've seen so many people who are not compliant, how they've ended up. Most of their businesses fail.
Yeah. One lawsuit and you are under. You're like,
Yeah.
Yeah, and there's an English word or words called something called information asymmetry.
yeah,
Information asymmetry is when you're in talks with someone,
yeah,
ng'oli omuntu akusinga information
yeah,
ng'akusinga okumanya. So what we have in Uganda is we don't educate ourselves. Tetumanya.
yeah,
So URA comes to you and you're completely bleak. There's a small business tax
Tax, yeah.
that
Yeah.
has a fixed rate.
yeah,
I think someone asked me yesterday before the webinar to tell children why they should take a career in tax, or why. I got into tax because
And
my
the
husband.
question is here. How does a child in the Netherlands prepare to work?
Yes.
in
Yeah,
taxation
I'm going to answer it as well. I got into tax because my husband and I were running a business back home in Uganda. And then I had just finished school. So then one day I was doing my accounting certification, but I hadn't yet done the tax part. So then one day we come and receive an assessment from the government, URA, it was 2 million then. So I go to my accountant friends, those who are already working in consulting firms. Then they take me through this stuff that also blew my mind.
Yeah.
And then I had to pay the person who helped us. We had to pay them 500,000 then. So I was like, why don't I invest this for myself? So that's how I end up going back to do tax. But one thing I've noticed is there's so much information asymmetry that you are a person comes and they have more information than you. Yet all this information is available online and online on the URA website. And the problem is we have bloggers, we have TikTokers who will come and like twist everything. There's a video that was going around. Someone came from diaspora still, nga atutte ebintu for business. So I think they like, if you are not VAT registered in Uganda, and you import things for business, they have to charge you what they call domestic VAT.
Yeah.
And then they also charge you VAT. It is a very common thing about subuzi bachimanyi nti what to train a VAT registration. So it's basically to get you to comply and you register for VAT.
Yeah.
So someone was complaining, government Bindu and airport, they charged me 14% and now 18%. I watched that video and then I'm like, this is all information asymmetry. The URA person has more information than this person. And this is why this person is going through what they are going through. So when it comes on TikTok, we're all going to make noise about it.
Yeah.
You don't want to be the one who is at the airport and they're charging you so much money simply because the URA person has seen what's on the flyer on the Revenue Authority portal, but you haven't had time to read it. So yeah. So Edward, a child in the Netherlands. So if you want to become a tax person, first of all, you go through the normal education system. So usually people who are in tax are lawyers, accountants, and economists. Yeah. But we all do different things in terms of tax. So economists are the ones who do planning for the country. Policymakers, the ones who come up with the tax. For example, like the DST I've told you about, the digital services tax. So economists, when they are setting a tax, but let me give an example. There's been talk about wealth taxes in Africa since COVID, because African governments didn't make money during COVID. So how do we recover right now?
Yeah.
Well, we can set wealth taxes. So the policymakers will sit and say, what is the policy behind us making a wealth tax? It is that we do equity. We make the ground level for everyone. We have a very, very rich person in Uganda who is driving a Lamborghini. We have one who is not eating.
Yeah.
What do? We tax the person with the Lamborghini a certain amount and then distribute it to the person who is not eating. So the people who have done economists. That's what they do. They plan for a tax, but before you release a tax, you have to know, is it going to make people better off? Is it going to affect how businesses work? Will businesses leave Uganda? Will more businesses come to Uganda? So those are economists. Then accountants, we are the ones who help you run the business now, like real-time discussion of tax laws. So if you buy these tax assets, how are they going to benefit your company? How are they going to reduce your tax bill? So lawyers and accountants do that, but accountants will help file the returns and basically run that business. Then lawyers will go ahead when the tax system comes to knock you and say you did not pay this much, then they'll go to court with you.
Yeah.
So anyone in the Netherlands, a child who wants to do something in the line of finance, something in the line of accounting, law, or economics, they can end up in that, and then I'm going to go and do tax policy or tax advisory. We have very many consulting firms here, the Big Four and all those. They are very nice place to start your tax career because you get to deal with different taxpayers and know how businesses work, and yeah.
Awesome. Thank you so much. I hope your question is answered, Edward. And while you were sharing, I was thinking about the TIN number, the tax identification number. If I have dual citizenship and I have a tax identification number in Uganda, are there implications for that?
Okay.
Let me answer.
Yeah.
Okay. There isn't much implications, but what you can do, because when you have a TIN, it depends the purpose for. What was the purpose for getting that TIN? Some of us got TINs when we are working, we are employed, and they were withholding tax from us, which is the payee. Some of us got TINs for businesses, but for payee, in case you got your TIN because of payee, there is no implication. Because you didn't register any business. But in case you got a TIN because you had a business, it means that you have to deactivate the TIN. And what does it mean? It means that if you are maybe you are coming here, you closed your business. You have let's say if it was an individual business, of course you have to just close and declare to your that have closed, and they deactivate the TIN. In case it's a company, you have to go through the process for liquidation of companies in Uganda. That's through the URSB system, and then they deactivate the TIN. There's no way URA can deactivate a company TIN without it being announced as liquidated by URSB. So there is no implication.
However, the other thing is every time you go into a country and you're going to spend a given time, like even if you go to the UK right now and you're going to do a master's degree or something, they give you some kind of national insurance number, like so that in case anything happens, everything is done on that number, identification number, same as a BSN here. So that number is like a TIN in Uganda. You do so many things on that number. So I wouldn't say that you always have to close it, because if you want to buy land, if you want to, everything is going to be done through the TIN. So this brings us back to where we came from. Are you making money in Uganda? Then you have to use your TIN to file the returns. But in the Income Tax Act, they say if you're not making any income in Uganda, of course you don't have to file a return. But then too, if your only source of income in Uganda is salary, then you also don't have to file a return. So you can have your TIN, use it for everything else you have to use it for, but that doesn't mean you have any income in Uganda. But it is very common for URA to now come to you because they've seen that you bought land. If your TIN is functioning, they can once in a while send you an assessment and say you paid so much money. But again, these people, you sit and talk to them and say, I'm Kenneth, I'm in the Netherlands, I have no income in Uganda. So then you can have the assessment removed or something like that. But you can have your TIN to do any business.
Actually, what most people in the diaspora do when they deactivate, but then if they have any transaction to do in Uganda, let's say land, because right now there is a law, you're not supposed, anyone who gets involved in purchase of land, you have to be with a team.
Yeah.
It means in case they are going to buy land, they activate, do the transaction, all the transaction that are involved in the process of purchasing of the land, and then deactivate. So it depends on what you want.
Okay.
But there is no tax implication.
That's good. That's good information to have. Thank you so much again. If our viewers, if you have any questions for our tax experts, Yvette and Violet, please share them in the comment section and we will have them answered here, so that we can be able to be in the know as far as this is concerned. Yvette, you shared why you got into taxation. I want to ask Violet the same question. What got you into this field?
Okay, what got me into the tax field? When just after my university, actually I got my first job before graduation. I think I was lucky. The first job I had was in a tax consultation firm, and this boss of mine had the passion, like he could develop me physically, and then like in terms of material, and then also he somehow let's he somehow persuaded me into
Haha.
it. Like I really fell in love with it.
Yeah.
Yeah.
Nice. Wow. This is fascinating that someone can have this impact or this influence on you in a positive way. Sometimes all we hear is just the negative stories, but it's encouraging to know that another person can actually inspire or inspired you to get into this field of taxation and to be able to do the things that you're doing right now. And the community is also now benefiting as far as this is concerned. So you've shared about a lot of information, and I'm really glad that we did this. For me, there's a part during the presentation that you mentioned taxation on when you um, buy securities, government bonds and securities, something like that.
Yes.
So, for example, let me just make a practical scenario here. If I have 20 million and I use that to buy government bonds, and I get a payment from the government back of 25 million, am I taxed on 25 million or I'm taxed on 5 million?
You're taxed on the payment, the interest that you get, because that payment how much are you earning?
So if I gave to the government 20 million,
20 million.
yes,
Yes.
and then afterwards I get back 25 million.
25 million.
Yes. So the tax is on the 5 million, right?
Yes, the tax is on the 5 million. But then the question is, because in most cases, when you invest in government securities, you invest for a certain period.
Yes.
Like 10 years, it's 20%.
If you invest less than 10 years,
Yeah.
they deduct 20%.
Okay.
Yeah, and if you invest more than 10 years, they deduct 10%.
Wow.
Why do they do that? They do that in order to discourage people from irredeeming.
Yeah.
Yeah.
Clear. Well, good information. So there's
so they're also encouraging you to save for longer,
Yeah.
save for retirement. So if you're investing in government securities and you invest for more than 10 years, then it is good for you, because the interest will be charged a lower withholding tax than if you invest for a less period.
Yeah. This is good. Derek says he's tuned in from Nijmegen. Derek, thank you for tuning in, and we appreciate. Question: somebody is here in the Netherlands and they have property. We mentioned the part about being compliant, wanting to be compliant, but I know that most of us would rather do this below the radar. We would rather just be we think we can be invisible or go unnoticed, or if somebody is watching us and they have maybe even rental properties in Uganda, but they are somehow getting away with paying taxes or getting registered legally, what can you share with them knowing what you know?
Sorry, could you ask the question again? So you mean they have rental in Uganda and not paying tax in Uganda?
Yeah.
So, that's tax evasion to start with.
Yeah, it's
So
a crime.
I don't know how to address it apart from saying tax evasion.
Yeah.
So if URA comes to you and then finds and then gets to know that they are rentals, they can charge you tax as far back as they think those rentals have been there.
Yeah.
And then you have to go to a long battle with them to actually like establish that no, I had them since last year. So that's what happens. So for me, like you also said, taxes for companies, tax is a boardroom issue. Tax can bankrupt your company, and so can it bankrupt a person. When I was still doing my first consulting job, Violet and I shared a boss at some point. He was my boss at first. There's a Haji who a very renowned Haji, by the way, who these people who sell food, like the food that we like so much, 2K Thai, those people who sell very nice food in Uganda, and they have big restaurants, very, very renowned. So people always go there to eat. And then URA comes and slaps this person with this tax bill. So he has been making money all this time, but never paying income tax.
Yeah.
But then when you are to review the income tax bill, it was too big that he was going to get bankrupted. So in that case, of course, you can sit with URA. Like some countries say, yes, you owe this much to the authorities. Then maybe you can make a payment plan, or they can forgive you. But that's between you and the tax authorities at that time. But I think it's me. I wouldn't encourage anyone to evade taxes. But if you can comply, you're better off complying.
Indeed.
And also, just to add on, from my experience, URA has started up a system whereby it gets in touch with national water and Wele.
Yeah.
So they get data from their system. Because if how is it called? If a meter is registered in your names, they follow up. It means that you are having rentals somewhere.
Yeah.
That's how they are getting data. And once they get you, you face it, prof. So I would advise that person would rather comply in any way that they feel like they are tax advantaged, whether as an individual or as a company. Yeah.
Awesome. This is good. Thank you so much. And there's a question from Sandra. She says, do you see a future where the Ugandan government will require individuals to file their income tax returns?
For that question, right now, an individual can also file their returns.
And it is required.
Is required actually to file.
Yes. Unless they have salary. From only one employer.
Oh.
Yes.
So if you have salary from only one employer, then you are exempted.
Yes.
But if you have multiple sources of income,
you have to file a return.
All right. This
that is
hope this answers your question. Go on, Yvette.
That is section 4 of the Income Tax Act. It's a charging section. So everyone who has income in Uganda, as long as you have income, you're required to file a return. Unless if you're an individual and you have income from an employer. And why is that like that? Because that employer is going to charge you pay as you earn.
Yeah.
Because even here in the Netherlands, if you only have one employer and you file your return, it will always come back 0-0. We don't owe you, don't owe us.
Yeah.
So in the Netherlands, if I have only one employer, the only reason I file my returns because I own a house. So
Yeah.
I have all these deductibles,
Yeah.
or school was now removed, or you pay tithe to a recognized institution. So that's what prompts you to file your return in the Netherlands if you have more than one employer. But if you only are earning that, you're not required to file a return.
Awesome. Thank you so much. This is good. Yeah, I think it's very valuable information. I'm really glad that we could do this because this is what we need more of in the community. Sometimes and this is just to share something to our viewers and listeners. If you feel there's an idea that you have, there's something of value that you want to give to the community, we have this platform. Let's make use of it. Reach out and we can arrange to make sure that you get to use the platform and to communicate what you want to communicate, because this is what community is all about. And truth be told, our strength is in our unity. And when you two ladies who are knowledgeable and skilled as far as this aspect of taxation is concerned, you come and offer your service, like you share this information, it is useful. Maybe someone watching this right now may be like, oh no, that's not for me right now, but you may get an inheritance in the near future, and then all of a sudden you are a landlord to an entire housing complex, and then you have to start to figure out all of these things. So this information is right here. Make use of it. If you have questions, please put them in the comments and we'll be able to address them. And maybe I just want to, if there's no other questions, just to ask Yvette and Violet, if you have any final remarks that you would like to share with our viewers and listeners.
For me, my final remarks would be, my advice is that there is nothing evil in being compliant. And also, we should befriend the tax authorities.
Wow.
Yeah, my advice, since Violet has advised us to be compliant, it's for us who are advocating on the political side. Part of our civic duty should be to task the government to explain more budget allocations, all this money that you collect. Because if you're in a country where the taxes, if you see what your taxes do, you always actually feel guilty when you don't pay a tax bill or a non-tax bill that comes from the government, because you're getting all these things free quality education. Yeah, the community is being taken care of. So us as Ugandans in diaspora, we have a voice. Politically, we've been having a very big voice, but also civically, we should do our civic duty in tasking the government to show us what our taxes do. Yeah, why are people having to go to India to date to have heart surgeries? Why are people having to leave the country because there isn't enough resources? So we should task the government to show us what they use the money for. And these budgets come out. Ministry of Finance has those budgets. We have all these loans that we get from China. But now countries have, like I think in Kenya, in Tanzania, a loan has to go through the parliament. So the whole country has to be involved before a loan is. So that's what we should task the government always when we have these conversations, these political conversations. If we take our hearts out of it and then just ask, let us talk. How are you going to use this tax money? I'm sure all of us will be encouraged to comply. But right now it gets hard to tell anyone to comply when they have to take care of their families. And
Indeed, I think that makes the aspect of compliance a bit challenging when people don't see what the taxes they are paying. so dearly are doing. And yeah, what do you think the problem is there?
That's a hard question.
So, in terms of that, I thank you for calling upon people in the community, for everyone to come and they use their gifts or whatever to talk to us. Today,
Indeed.
I came to tell you what URA's mandate is, and Parliament mandate. Parliament is the policy maker, so all the rules we have mentioned, Parliament brings them up. That's why the capital gains tax that's going to be imposed on us for selling our properties is now in Parliament.
Yeah.
When Parliament approves it and the President signs, URA's mandate is to collect tax relying on those laws. So when URA collects tax, URA is like that trader who is collecting VAT. It only collects the money and takes it to Ministry of Finance.
Yeah.
So that is where I don't know what the money does. Of course, I see the loop, I see the issues, but these are issues basically in most developing countries. So that is where people on the political side, people on the planning side can come in and say and explain to us why is the African continent still having issues like this when so much is coming out of the tax of URA collections and all.
Indeed. Wow. Thank you so much, Yvette and Violet. On behalf of the Ugandan community in the Netherlands, I want to say thank you for the preparation that you did to be able to deliver this to the community. And we are grateful and we are glad that you are part of us here, because at least we know if somebody has a concern that is tax related about something in Uganda and they don't know where to turn, do you give them permission to reach out and ask you questions as far as this is concerned?
Do you? Yes, of course. Yes, of course.
Indeed. So thank you so much. We are so glad that you're here, and we will be keeping in touch. And if there's any other questions that come up, if the community asks for you again, we will reach out and ask to do this again.
Thank you, Kenneth. I think we had a good time having this engagement with you. The questions are very interesting. Yeah, but one thing in conclusion is you will never pay tax in both countries. It is just the countries need to know where you belong, so that they know which country does not relieves you of the obligation to pay tax. Yeah, so when you declare your incomes worldwide, you're not going to pay tax in both countries. You're only being relieved of, like, one country has to relieve you of the tax you've already paid somewhere else.
Very well.
Yes.
Wow, thank you so much, and we'll be in touch.
Yes,
Okay, thank you.